Hello and welcome to Wake Up and Smell the Mic S&P 500 review for Tuesday, April 18th, 2023. It's now the 17th. We start off in the S&P 500 daily chart in DeMark looking back to end of December 2021. I'll zoom into the current area now. The S&P 500 daily chart has printed the combo and sequential sell setup 5 count. And to negate that for end of day on the 18th, there must be a close below 4091.95 for the price flip to the buy setup count 1. The daily chart has qualified the combo and sequential buy TDST level. There was an up close on the 13th, followed by a down close on the 14th, followed by an up close above the buy TDST level on the 17th, 4151.32, TDST 4147.60. To get the confirmation bar, price must open higher than this close on the 18th, and then tick higher than this high on the 14th and close end of day on the 18th above this close on the 17th, and this level will be qualified and confirmed, and that will be kind of a huge deal as the 50% propulsion exhaustion up qualified and confirmed was tagged yesterday on the 14th, so that's an indication of more upside, and then this gets qualified and confirmed, and that's even better. And now these qualified supply projections have been negated as this qualified supply line provided a new projection up a little higher here at 4465.24. And to the downside, this ongoing demand line, which for the 18th will be at 4089.66, would become qualified with a close under that level. The conversion line has been very good support these past 4 days. It has taken a horizontal move here though, so maybe it'll just go horizontal and continue being good support. So that would protect that from becoming qualified. If it breaks through that, it could get qualified, and this too with a close underneath it. The trend factor disqualified down 1, and the Stark band and channel 3 low band are running right together, so that's good support there too. The S&P 500 weekly chart looking back to the COVID crash era. I'll zoom into the current area now. And this supply line became disqualified, and we don't really pay attention to that in the weekly chart as it opened above the supply line that was ongoing this morning. So that should have become qualified because it opened above it and closed above it. So that's why we don't pay too much attention to that. So it broke above that line there, and the high channel 3 bumped up significantly, and price is getting near that upper band. There was a breach of the upper band here, so it's really pushing the envelope here. And the weekly baseline bumped up a little bit. Conversion lines stayed the same, so they're becoming closer together. We got to watch out for a crossover of the conversion line by the baseline, but that's really hard to do. I've seen these hit each other and just run sideways for a while with the baseline under the conversion line, so we won't worry about that for now. the NASDAQ 100 NDXHILO chart, you can see the ROC 12 went under -5. It's at -7.89, and there was no cross under of the 5 EMA under the 10 EMA in red. I don't think I've ever seen this ROC 12 backtrack a little to get back to -5 and then have a cross under here. But stranger things have happened, so we'll monitor that as we've been watching this every day. And the NDXHILO short-term KST looks like it's trying to pull back on the stick a little bit and head back up for another barrel roll. And the intermediate term KST is definitely in a pronounced rollover to the downside. However, the long-term KST remains in an upward trajectory. So if the short-term can come around again and head up, and the long-term stays on an upward trajectory, then it could possibly happen where the ROC 12 will backtrack a little bit, but I've never seen that happen before. And the New York high-low looks exactly the same as the NASDAQ composite high-low chart, so we'll just look at this one. You can see the blue 5 EMA is starting to have a more pronounced rollover, but it's still well above the red 10 EMA, and the ROC 12 is miles away from getting to ±5 at 0, so +5 or -5, anywhere in between there, and have the 5 EMA go under the 10 EMA in red. And I cannot even begin to tell you how many individual equities that I'm finding in my scan that have this exact KST configuration. Short-term rollover is very pronounced. Intermediate term KST is headed straight up, and the long-term KST is in a downwards trajectory, just like that. The VIX has breached its last line of defense in off-color green here. Goes back to 2019, another anchor here in 21, and it has broken below that last 2 days. It has fallen below its 50-to-1 lower Bollinger Band, meaning 50 period simple moving average for the middle band, and 1 standard deviation for the upper and lower bands. I'll zoom into this current area now. The VIX has printed the combo and sequential buy setup 3 count, and to negate that for end of day on the 18th, this morning is the 18th, there must be a close below 19.09 for the price flip to the sell setup count 1. So it has a good chance of at least making it to 5 or 6, even if it heads back up. And being under this line here around 16 area means that the VIX has gone very low and is usually ripe for a turnaround, especially being under the lower Bollinger Band. It can live under the bands for a while, as you can see back here, but it's really this line that was a milestone to get under. I have nothing on except the sequential and combos, and the only thing to the downside is a sequential cluster disqualified buy risk at that level. The CBOE total put call ratio charts KST shows it right below 0 at -5.15. S&P price is headed up, and if that keeps up and reaches the goal of that bottom line here in blue, somewhat like this, that could mean that the VIX could actually make it down to that sequential cluster buy risk level in the VIX. The S&P 500 support and resistance levels big board chart shows the gray areas at the weekly high channel 3, R2, and R1. Price in the pre-market hours for the S&P 500 at 6 a.m. on the 18th is 41.69. So to the downside is the disqualified by TDST, S1, and pivot point are the ones to the immediate downside. To the immediate upside is this daily ongoing supply line, the weekly 2018 broadening top in dashed red, and the uptrend line from 06/16/2022. And the Rock 1 is right at zero again, to negative 0.33. ATR2 is well into its green zone. So this is a reflection of that VIX simmering down and the CBOE put-call ratio getting bullish. And the PPO extreme is at 3.61% above zero. And the New York traditional McClellan breath oscillator to get back to zero would require 1,932 decliners over advancers to get back to zero. Have a great day.